The hopeful saying, "Go woke, go broke," might very soon become actual, genuine, observable reality. As, let's be honest here, was a cute turn of phrase, it hasn't been truly, genuinely correct. Now has it? As, whilst countless companies and corporations have lost enormous quantities of money, seemingly unsustainable amounts of money, again and again and again, on various woke projects, programs and products, they haven't actually gone broke, have they? I mean, hell, we still have gaming journalists to this day, despite the general consensus being that their existence and value in society is roundabout comparable to that of your average tapeworm. Actually, that's a bit of an insult to the poor parasite. At least it helps you lose weight. And yet again, far from going broke, we actually see companies embracing wokeism more and more in many cases, like, for example, CD Projekt Red talking about their ESG score and approach. Well, why is that? Many of you already know it is that little three-letter word right there, ESG, standing for Environmental Social Governance. It is a series of metrics that investment companies, enormous investment companies worth trillions of dollars, use to determine whether or not they should pour a seemingly infinite ocean of money into a company to plug any hole that any loss of nearly any project could ever conceivably produce. And thus the companies never go broke because they are tapping into a literally infinite flow of money. And yet the glory days might be about to come to an end here. Vanguard drops out of climate initiative as a reaction against woke investing continues. Now, Vanguard is one of the big three investment firms alongside BlackRock, for example. Vanguard manages some, I think, $4.9 trillion. Oh yeah, when I said pretty much infinite money, I meant it. 4.99 trillion for one of these companies. And yet, it has dropped out of a climate initiative. Interesting. What exactly was this climate initiative? Well, it was this here, the Net Zero Asset Manager Initiative. So this itself, if not another investment firm, instead it is a, how do I put it? It is kind of attempting to be a guidebook, an instruction manual, a cult, if you will, trying to explain to asset managers why they should invest more and more and more money into the seemingly black hole of green energy and environmentalist projects. The problem is, most of these don't actually earn money. In fact, most of them are an enormous loss, especially now as energy prices are skyrocketing and the only things capable of meeting the demand of that skyrocketing price is, well, traditional energy. Very interesting. So why do these companies continue to urge their investors to spend their money on what is clearly a poor investment? Well, that is because they themselves are woke. There was an interesting mention here. Some environmental groups who follow pledges towards net zero greenhouse emissions from the lifeblood of the economy, the finance service and the banking sectors, Vanguard, BlackRock, etc., called the exit a major blow to the effort. These groups argued that such a move is kowtowing to anti-woke sentiment. I think that's the first time I've seen that. So, what you're telling me is that a major organization has been cancelled due to anti-woke sentiments. Oh, that just brings a smile to your face, doesn't it? The claims investment focused on the impending clean energy transition. The impending clean energy transmission. Ah yes, that's been going on for the last 30 odd years, hasn't it? And other pro-climate actions only come at the expense of investment return. So that is the argument here. There is a lot of interesting argumentation around this. This one, for example, end Vanguard ESG meddling with utilities. So Vanguard has been seen to apparently be driving up the price of energy, benefiting China, and this guy alleges that they are doing this on purpose. Because, well, if you've got a massive investment company and you've got an energy crisis, what do? Well, you invest in the traditional energy creating sector to alleviate that crisis and also to earn your investors lots of money. And yet, apparently, they haven't been doing that. Presumably at the behest of groups like this. And BlackRock as well has been one of these companies that has been doing this and has now been subpoenaed in Texas, scheduled for hearings for BlackRock playing politics using Texans' hard-earned money. Because, of course, the ESG score is a political platform, environmental, social, and governance. And there was a very interesting one here. So Larry Fink, the CEO of BlackRock, had a little podcast interview, which he put out completely in public, talking about the globalization of the economy and how one must make advantage of this, how he's looking forward to governments spending more and more money again on the endless black hole of renewable energy, and how he was going to take advantage of that in particular. Interesting. So almost as if the evil supervillains are telling us the plan straight to our face. But he also, of course, continues to talk about how globalization is fantastic, and how access to capital should be a privilege, not a right. Lovely, lovely, lovely. There is also Florida here, which is about to pull $2 billion out of BlackRock, citing its ESG investing. More and more of these states are beginning to look at ESG and going, hold on, this is a expressly wokeist agenda. And again, you remember the video I did on the ESG approach of CD Projekt Red. It was simply a series of wokeist buzzwords, one after the other. There is really no question about this. And amusingly enough, BlackRock is also taking fire from the left as well. Because you see, the left is annoyed that BlackRock is earning any money at all for its investors, and calling it hypocritic for doing so. When the price of coal was around $76 per ton, BlackRock were talking about essentially divesting, so getting rid of any and all holdings you have in coal, because it'll be environmentally friendly, thereby following their ESG score. But now the price is $380 per ton, they're talking about responsible ownership. Imagine that. It's almost as if these investor type will go with whomever seems to be getting the most buzz and earning the most money and what is the most popular at the time. And there's the thing about the globalization of it. The access to capital part is a very, very interesting element of this entire argument. So, access to capital. Essentially, access to investors' money. Now, hedge funds and investment firms like this essentially make a promise to their investors that they will do their very, very, very best to see their money increase. That is, in fact, a legal pledge they make as well. As I think a big part of this guy's argument is that they are not upholding that pledge. They are playing politics rather than earning money in the good old-fashioned capitalist bloodsucker way. Meanwhile, the ESG score is intended to be kind of a revolutionary overpass, where they're looking at green energy and going, okay, well, this is a globalist agenda, because that is exactly what it is. It demands that the entire globe do what the environmentalist lobbies urge them to do. And what they usually urge them to do is waste monies on pointless projects, rather than actually doing anything to solve the problem. And make no mistake, the environmentalist movement of today is near exclusively a left-wing movement, especially in that it's very good at pointing out problems, but absolutely shit at providing actual solutions, like, say, for example, nuclear power. A thing that the environmentalist movements avoid like the plague because it would end them. If we actually had access to near limitless quantities of renewable energy, well, all of this money, all of the sweet trillions flowing from BlackRock and Vanguard would simply disappear. Because remember, access to capital is a privilege, not a right. And meanwhile, BlackRock and Vanguard wishes to see the continued globalization of the markets because it gives them power as well. This is simply one left-wing movement utilizing another in the most abusive way imaginable. But finally, now that questions are being asked about the legality of these practices, about benefiting themselves first and the investors second, well, there is clearly some capitalist left in these people as they quickly begin to abandon and freeze hirings, put check on expenses, citing performance challenges. Well, imagine that. The gravy train might finally be coming to an end. Unironically, the old saying, hard times create soft men create hard times create hard men, or good times create soft men, circular. There's something to it. Right now, companies like Disney, for example, have been able to produce all the woke garbage they could possibly desire because they can get as much money as they could possibly desire from investors. CD Projekt Red no longer needs to worry about making a good game to make you purchase it. They simply need to recoup all their losses from investors. It is today literally easier to convince somebody to give you more money than it is to make and sell a good product. It is a bit of a ridiculous situation, but it is absolutely where we are. However, again, with these companies beginning to actually lose money, beginning to be attacked from both the left and the right, and seeing problems with performance challenges, as they put it, well, they can no longer choose to just simply flush the money down the drain. That's the big change. Once money becomes more scarce, once more money needs to be spent on power, on energy, once no more money seems to be flowing into the green sector for seemingly no actual results in an endless stream of repeated governmental investments, you're gonna have to move on to something else, because they too need to get their money from somewhere. And if it can't come from the wokeist agenda anymore, well, I bet they'll flip awfully quickly. Capitalism does work, albeit belatedly at times. And that will in turn, of course, means that companies like CD Projekt Red might be jumping on the bandwagon at the worst possible time. As we've seen from the recent Witcher 1 leaks, for example, rather than seemingly improving upon the game, they focus on adding in the ballsack armor from the Witcher TV show's universally loathed first season, which was single-handedly saved by Henry Cavill's acting. This seems a poor time to choose to make garbage, hoping you can replace the losses. And it will eventually lead to companies being forced to make good products again or die because they will no longer be able to sustain the losses. Thus, finally, go woke, go broke might become a reality. And god damn it, do I hope it. Now, I'll also point out that these things are far from crippling yet. A simple subpoena, pulling out $2 billion, this is nothing to companies whose value is measured in the trillions. But what these people do understand is connections. They understand public perception. Because at the end of the day, all the market is that public perception. The moment BlackRock and Vanguard get the reputation for being wokeist companies in a world that no longer tolerates wokeism is the moment they die, as their advice, their value, their assets, and their market expertise is suddenly worth dick and zero. And again, it does bring a smile to your face, doesn't it? Oh, 2022 has been an interesting year, at least the last few months of it, and may Allah see it all continue. Until next time, I've been Arch. Thank you all very much for watching, and I hope to see you all again soon, hopefully with more good and happy news. Have a good day.